Ever wondered how some students are out here buying stocks while you are still debating whether to splurge on that extra large pizza? Yeah, me too. But what if I told you that you could start investing with just $100 and a dream? Stick around, because today we are breaking down how to start investing in Canada as a student. No finance degree required. Okay, real talk. You are probably thinking, I'm a student, I'm broke. How am I supposed to invest? But here is the thing. Investing isn't just for rich people or those who eat avocado toast for breakfast. It's for anyone who wants to stop living paycheck to paycheck and start building wealth. And guess what? You are in the perfect position to start. Imagine this. You are 30 years old, sipping a latte, a mimosa, no judgment, and you are not stressed about money because you started investing back in university. Sounds dreamy, right? Well, that dream can start today. Let's dive into how you can make your money work for you, even as a student. Alright, let's get into it. I'm not a financial advisor, but I'm someone who's been where you are, scrolling through Reddit threads, trying to figure out what a TFSA even is. Spoiler alert, it's not a type of sandwich. Today, I'm going to walk you through the basics of investing in Canada as a student step by step. By the end of this video, do you know exactly how to get started, even if your budget is tighter than your high school jeans? Why should students even care about investing? Let's face it, being a student is expensive. Between tuition, textbook, and trying to have a social life, it feels like your bank account is on a permanent diet. And when someone says investing, you're probably like, with what money? Marame know the fund? But here is the conflict. If you don't start investing now, you are missing out on one of the most powerful tools for building wealth: compound interest. Yeah, it's like magic, but for money. Understanding your financial goals before diving into stock market, ask yourself, what am I investing for? Are you saving for a car, paying off student loans, or building an emergency fund? Maybe you just want to stop living off instant noodles. Valid goal. Knowing your why helps you choose the right investments and stay focused. For example, short-term goals like a vacation might suit safer options like high interest savings accounts, while long-term goals like retirement can handle riskier investment like stocks or ETFs. Start by writing down your goals and assigning timelines. This way, you have a clear roadmap and avoid investing blindly. Remember, investing without a goal is like driving without a destination. You just end up lost. So take a moment to define what success looks like for you and let that guide your financial journey. What even are stocks, ETFs, and mutual funds? Let's break it down in a simple term. A stock is like owning a tiny piece of a company. For example, if you buy a share of Apple, you own a simple slice of Apple success. If the company grows, those your investment. But if it struggles, your investment could lose value. Stocks are great for long-term growth but can be volatile, so they are not for the faint of heart. Next up, ETFs, exchange traded funds. Think of ETFs as a basket of stocks or other assets. For instance, an S&P 500 ETFs includes shares of the 500 largest companies in the US like Amazon, Google, and Tesla. This diversification makes ETFs less risky than individual stocks and perfect for beginners. Plus, they are traded like stocks, so you can buy and sell them anytime during market hours. Finally, mutual funds are similar to ETFs but are actively managed by professionals. For example, a mutual fund might focus on tech companies or emerging markets. The fund manager picks the investments, making it a set it and forget it option. However, mutual funds often come with higher fees compared to ETFs. In short, stocks is equal to ownership, ETFs is equal to diversification, and mutual funds is equal to professional management. Choose what fits your goals and risk tolerance. Quick story. The first time I heard ETF, I thought it was a new EDM festival. It turns out that it's an exchange traded fund, which is basically a basket of stocks you can buy all at once. So no glow sticks involved, but still pretty exciting. TFSAs and RRSPs explained without boring stuff. Let's break down TFSAs and RRSPs. I know it sounds like alphabet soup, but stick with me. But they're actually powerful tools for managing your money. A TFSA tax-free savings account is like a magical box where your money grows tax-free. Each year, you contribute up to a specific limit. For 2025 is $7,000, and any interest, dividends, or capital gains you earn are completely tax-free. For example, if you invest $50,000 in a TFSA and it grows $7,000, you won't pay a single penny in taxes on that $2,000 profit. It's ideal for short-time goals like saving for a car or vacation, or even long-time investing if you're already maxed out your RRSP. On the other hand, an RRSP, Registered Retirement Savings Plan, is like a piggy bank for your future self. When you contribute to an RRSP, you get a tax deduction now, which can lower your taxable income. For instance, if you earn $50,000 and contribute $5,000 to your RRSP, you only pay taxes on $45,000. In cash, you will pay taxes when you withdraw the money in retirement, but ideally, you'll be in a lower tax bracket by then. In short, TFSA is equal to tax-free growth. RRSP is equal to tax-deferred growth. Use a TFSA for flexibility and RRSP for retirement savings. Your future self will thank you. Before we go any further, I want to hear from you. Drop a comment below and tell me, what's your biggest fear about investing? Is it losing money, not knowing where to start, or just the fear of adulting in general? Let's get a conversation going, because trust me, we are all in this together. How to open a brokerage account is easier than you think. Opening a brokerage account might sound intimidating, but it's actually as simple as signing up for a streaming service. Platforms like Simple and Questrade are beginner friendly and perfect for students. You can start with as little as $100 and they guide you through every step. For example, Simple offers a user-friendly app that lets you invest in ETFs, stocks, and even socially responsible portfolios. They also have no fees for accounts under $1,000, making it a great option for beginners. Questrade, on the other hand, is known for its low trading fees and flexibility. You can buy ETFs for free and only pay when you sell. Here is how to get started. 1. Choose a platform. Compare fees, features, and ease of use. 2. Sign up. You need your SIN, ID, and bank details. 3. Fund your account. Transfer money from your bank. Even $50 is a start. 4. Start investing. Pick ETFs or stocks that match your goals. Think of it like signing up for Netflix, but instead of binge watching shows, you are building wealth. Is that simple? Start small, think big. Here is the thing: you don't need thousands of dollars to start investing. Even $50 a month can make a difference over time. The key is consistency. Think of it like going to the gym. You won't see results overnight, but over time, you will be glad you started. Pro tip: don't invest in something just because your cousin friend's dog walker said is the next big thing. Do your research. And if you're ever unsure, just ask yourself, would I bet my ramen budget on this? If the answer is no, maybe rethink it. Setting financial goals and budgeting. Budgeting might not sound exciting, but it's the foundation of financial success. Start by tracking your income and expenses. Apps like Meet or YNAB can help. Next, set smart financial goals: specific, measurable, achievable, relevant, and time-bound. For example, save $1,000 for an emergency fund in 6 months, or invest $50 monthly in an ETF for long-term growth. Break these goals into smaller steps, like saving $20 a week. Budgeting isn't about depriving yourself, it's about prioritizing what matters. For instance, if you love travel, cut back on eating out and allocate those savings to a travel fund. Remember, every dollar you save or invest today is a gift to your future self. The power of compound interest. Here is the secret sauce. Compound interest is like a snowball effect for your money. The earlier you start, the more time your money has to grow. Even if you're only investing small amounts now, those small amounts can turn into big gains over time. Alright, here is your homework. Open a TFSA. Seriously, go do it right after this video. It's free. It's easy and it's the first step to becoming an investor. If you are not sure where to start, check out platforms like Simple or Questrade. They are beginner friendly and perfect for students. And hey, if you're already open one, drop a comment and let me know how it's going. Before we wrap up, let's talk about mistake. Don't try to time the market. It's like trying to predict the weather in Canada. Impossible. Also, don't panic when the market dips. It's normal. Stay calm. stay focused, and keep investing. Let's wrap up this up. Investing as a student might seem intimidating, but it's one of the best decisions you can make for your future. Start small, stay consistent, and remember, you don't need to be a millionaire to start investing. You just need to start. So what are you waiting for? Your future self is counting on you. If you found this video helpful, hit that like button, subscribe, and share it with a friend who is also trying to figure out how this whole adult thing. Don't forget to drop a comment below. I love to hear your thoughts or answer any question. Thanks for watching, and I see you in the next video. You're welcome.